How many times have you been trading in a market or stalking it as its trend develops, building for a breakout, only for it to break and then turn around and collapse? In this video, I'm going to take you through a technique to help you understand what's happening below the surface so you can avoid making that mistake. This is exactly what happened in copper just in the last few days. If I zoom in to look at recent price action, you guys will see and go through what actually happened in here. And we've seen we had a real nice break initially, market pullback. We started to consolidate for a number of days, and then we started to push higher again. We actually pushed towards, made a new high, and then retraced, and we got this huge drop to the downside. Now, many of you will hopefully be looking at this and thinking, well, price action on its own isn't strongly supportive of a push to the upside, and there is negatives in here, definitely, but I know there were people who were long. I know there were people that were interested after the initial break, building within this consolidation and trying to trade long in here. And if you were trading on smaller time frames and quite quick, you could have been able to get some profit out of this. But there were quite a few, because I've had emails from people about this, that were caught on the wrong side. We're entering late as the market was pushing up towards the high, so not reading the price action, and then got caught obviously on the wrong side as the market collapsed. The simple technique I want to show you is based on the commitment of traders. And the concept is very simple. If a market is going to break out, if it's going to see a strong move to the upside, then we need to have buyers. There needs to be buying, plain and simple as that. If we take a look at the copper data, however, from the commitment of traders, if you're not familiar with the commitment of traders data, it's a record of every active buy and sell, or every position held. It's not orders, every position held within a market, and we can access data for copper. And we can see here, if we just zoom in, so this is a weekly chart of copper we have here, and this is all the long and short positions from various groups, commercials and non-commercials. And for this market to push to the upside, we had seen a decent consolidation here and a nice break, which was short-lived, and we've seen it all corrected very, very quickly. We need to see buying in here. And that's where the commitment of traders comes into its own. We can look to see what the buying activity is and what the likelihood is if this breakout's going to hold, or if we should even be anywhere near trading it on the long side. And very quickly we can see down here, this is the long contracts from the non-commercial positions, so speculative positions. We have no buyers. Practically, well, not zero, but practically historic levels. We're very, very low levels of buying. That is a huge negative. A market cannot go up without buying activities. If we get a break and then they come in strongly, like we had in these sort of areas back here, that's fine, but they never did. We were up there for multiple weeks and they never attempted to come in and follow through on that. Here's an example of what we need to see. You can see a previous, much longer lasting uptrend. You can see buyers coming in. Speculative buyers typically come in at the early stages of an uptrend, and we see the market start to move to the upside, and their buying accelerates along with that uptrend. You see then start to leave the market, so there's long positions been coming out. You can see the market then pauses, and eventually then the market rolls over. Again, we had been consolidating in this area along with price, and just as we get the breakout in this area here, we see a spike to the upside in buying activity, strong buying activity, driving the market to the upside for a good few months. We get to an extreme, and they start to pull out that money, and as they pull out that money, then that market starts to retrace and move to the downside. This time, however, we didn't even attempt to build. There was no accumulation phase during this area before the actual break. There was a tiny move within the long contracts, but it's not something that's going to create this kind of movement. And as soon as we got the break, they actually started to cut those long positions. So there's no buying going on in here. The likelihood of this being a profitable long position and a good place to be going long in this market, even though technically it looks to be a real nice breakout, long structure, a long-term structure we have here that's building and breaking out from that area. The fact that we have no buying in here, the likelihood of that going higher is extremely unlikely, and the simple choice is not wanting to be long and waiting for that market to break lower, come back inside the long-term structure that we have here, and actually be on the short side, and we can see it's continued to move to the downside since. That is where, say, understanding what's happening below the surface, understanding the buying and selling that's going on within a market, who's buying, who's selling, how much buying and selling is actually going on. That allows us to see what's going on in the market, and therefore understand much better. Are we going to see, or can we expect to see a continuation of an uptrend, expect to see a continuation of a downtrend? Should we expect to see the market reverse? Understanding positioning is crucial for that. And the only way we can do that is via what is called the commitment of traders. And we have access to many major markets. The data we have, there's a really interesting one at this point in time of copper that I want to draw attention to, because it's a common mistake a lot of traders make, and it's an easy one to avoid. So just understanding what's happening below the surface will keep you out of a lot of trouble. Check it out for yourself. Come on, join on to the website, take a look at the data, and before long, hopefully you'll not be making those mistakes and actually knowing, preparing to get short in scenarios like that, as opposed to looking for longs after a breakout.